Daniel Major, the CEO of Goviex Uranium. Goviex is focused on the development of its Muntanga project in Zambia. Recently put out a feasibility study for that project, highlighting the strong economics for it and its potential to be producing in 2028.
Daniel, good to see you. So good to see you. Look, before we start, I'm going to tell you a little story about in 2013 and 14. My favorite football team was leading the league, needed to win this last game, ended up losing. We're losing 1-0. As long as they didn't lose 2-0, they would have won the league. And an unfortunate slip by the captain of the team meant that they lost the game 2-0 and then lost the league. Very, very sad. But the captain then came out and said, "Look, it's a pity, but we've just got to go again." It kind of feels like it was 2024 was that kind of year for you guys. Resilience needed. How are you feeling?
Yeah, you're absolutely right. What's the one? I'm looking for the egg and not normally curate's egg kind of year. I mean, tough year, but what a great year to come out at the end of it. I mean, I don't think you'll find many companies out there who can have a license expropriated in the middle of the year and at the beginning of the following year, right at the beginning of it, coming out with a full bankable feasibility study for their next project and ready to go again. So I think we really turned that year around and move forward.
Well, to that point, I'm not going to sort of dwell on. Well, you can talk to it at the end. The kind of Niger factor and what you're going through there legally. Let's focus on what you say is the highlight, which is a bankable feasibility study on another project. Numbers aren't too bad. I mean, what did you make of it?
Yeah, I was very happy with it. I mean, look, we have gone from a PEA in 2017 to a full bankable feasibility study in one go. We have done the engineering on 5 different deposits, not one, 5 different deposits to build all of those together. We've come in with a project whose actual cash costs are almost the same as they were in 2017, even though you're looking at something like 40% inflation in our industry over that period of time. Capital is higher than we originally had, but the original capital didn't even have the mining fleet in it. And we've changed that around and went to an owner-operator. And there's some options for us to go forward on that. So I think there's a very robust model there. It's supported by the current prices. It can be built now, and that's going to be our next target. We use $90 because that's what all the forecasts are as well, and it's very clearly a very doable project there. And I think the thing I point out as well is those paybacks. I mean, at $90, you're looking at a 3.8-year payback. At $80, 4.8. So it's very debt financeable as well as a project. So I came away from that very comfortable. It's a very simple project, just what we like.
Okay, well, look, I'm going to come back to that $90 in a later on in the conversation because we need to talk about the micro there. But let's kind of stick with the technical, if I may. Look, you talk about it as a very sort of simple operation, which is probably partly why you've been able to kind of go through the economic study phase relatively quickly. Can you sort of just lay out what exactly is in front of you?
Yeah, so as you know, there were 5 deposits there, and one of the things that we did do was focus it on 2 of them, the Muntanga and the Dibwe East deposit. And we did that on purpose, Matthew, and we kind of said, look, we've got to go and take this to the banks. Let's focus on the core, which is like 85% of the total resource there. That is something we can show that we can build, that we can develop. It's soft mining. It's simple open pit mining. When you start in the Muntanga deposit, within 4 months, you're already in ore and you're already stacking onto the heap. The process, it's an on-off heap leach. Very straightforward with quick recoveries, 21 days, high recoveries, at least 90% for the life of the mine, into an industry standard ion exchange elution, which is what you'd see in an ISR project. So, very simple. Infrastructure's there. We've got roads. We've got water. We're next to Kariba Dam for the power as well. All the things you would want for a mining project are situated for Muntanga.
Right. And okay, we'll stick with technical for a bit, if you don't mind. So we've seen in the last year and a half, a few companies kind of blow up at this stage in terms of the economic studies with the numbers. you're indicating that shouldn't be the case for you. But then when it kind of comes to the practicalities of building this out, some pretty nasty things. Even on the heap leach side of things, I'm thinking Victoria Gold specifically, rainfall out where you are can be rather brutal at certain times of the season. So I'm interested in terms of that heap leach design, some measures in place in terms of maintaining stability, rainy season or stacking, removals, and even things like pad erosion. What have you kind of designed into all of that?
Oh, absolutely. I mean, that obviously has to be, you're in Zambia, it's subtropical, you have a lot of rain at certain times of the year, and that was fully designed into the process. So that's one of the benefits of actually having 4 pads, because each one of those pads is doing different things in that process. So if you get a lot of, and so you got one pad that's being loaded, there's one pad that's being leached, one pad that's being rinsed, and then one that's coming off. So each one of them is separately feeding to different ponds. So if you get a lot of rain on the leaching one, or the one you're loading on, that feeds directly into your PLS pond. So that one you can then just feed around and you just get it back up to grade and then come off. The other one actually goes into a big storm pond. So you actually take that and you feed that into the storm pond, which is where we'd normally rinse. So you've built that capacity into your ponds and you can deal with that as well. By building it into a 4 pond, you reduce the footprint. So it's not one big pad. Because if you do one big pad, I think we ended up with one big pad, it was like 3 million square meters. Enormous. A lot of catchment, but this isn't. Because you're taking everything off and putting it on a spent ore dump, you've completely shrunk the catchment area for the water associated with the process as well. So very considered issue. Actually, interestingly, Zambia has a negative rainfall overall. You get a lot at certain times of the year.
That's what I mean. I know. Washes away roads, which is another whole issue.
No, I mean, rainfall and those climatic changes during the year, very much part of the design process that had to be taken in. And again, the design is resilient and handles those changes.
Okay, and what's that do for things like acid consumption over that period, and how do you manage and mitigate that?
Oh, in that period when you're aiming, the one thing you got to remember here as well, we agglomerate right at the beginning. So we're using a lot of sulfuric acid right at the front when we put it on the heap. You're putting it onto the heap, and that is 25 days to load it. So for 25 days, this thing has marinated. And then you're putting on a weak sulfuric acid to wash that marination of sulfuric acid out. So actually the rain helps you to that degree because it actually helps bring through the solution. So it's not a big issue to go forward because most of it's the agglomeration that's actually doing the hard work for you to get the uranium out. So it doesn't, by catching it in the PLS and then taking it back through the barren, you just keep recirculating. And the other thing you do know yourself, Matthew, with this rain, it's not like English rain. It doesn't start in the morning and 4 days later it finishes. It comes once. It just hits you in half an hour and is gone. And then it's sunny and dry again. So it's a very different approach. It's very quick. It runs in. And so a lot of that just rushes off the side anyway, and you can deal with it.
Yeah, if the surface is hard, it does tend to run.
We catch it within the liner anyway, and we store it, and then we can just process it around again.
And did you say, therefore, in terms of humidity as well, but obviously there's like someone throwing a bucket of water on you. But humidity, what's it like there?
That doesn't make any difference.
Okay. What have you done with regards to, obviously I'm focusing on the heap leach stuff at the moment, but with regards to technical studies on the crush size, what work did you do, and how did you end up on the number that you did? Was it 25?
25 millimeters.
Yeah.
Nice and easy. We literally ran multiple tests to see whether size made a difference.
Okay. It's like in-field tests. It wasn't desktop. We went
in the laboratory. We went through the laboratory and did multiple tests and said, well, does grind make a difference? And no. And you can see that when you look at the rock, there is very little fines in it. It's a very coarse sandstone with a lot of open spaces in it. I mean, if you take core, you can literally just stamp on it and you'll break the core with your foot. So it's not like, some sandstones with a lot of cement holding it together. This doesn't, and the minerals are very exposed, 90% liberation. So it's effectively just a big sponge, which is why you can go down to this sort of only an inch for grind and then put it through. So And of course, we then did all the stacking in the columns at that size. So we proved that it works as well. So that over 90% is based on the columns that were done at a P80 of an inch.
Okay. And with regards to costs, like, this is such a kind of like a simple DFS in many ways. So it's kind of worth just talking to some of the kind of variables in here, if you don't mind. So sulfuric acid, back on that. Obviously, you've got some copper producers, Zambian copper producers there. Is there going to be enough sort of domestic acid production to meet your needs, or were you looking to get the acid from, and what work have you done in terms of that costing exercise?
Well, we actually looked at 2 different markets just to make sure we were protected. I think there's 3 sellers at the moment in Zambia, but we can also get it from South Africa as well. The other one to remember is Kamoa. The Ivanhoe's project is just about to build a new smelter as well. Zambia currently is a net exporter of sulfuric acid. And with the smelters being restarted or expanded, it's just going to increase the amount of sulfuric acid that it produces. So we don't see that being a problem. If it is, we can get backup out of South Africa, which is a massive producer of sulfuric acid as well.
Okay. Bankable feasibility study, and we'll get into again, where you go from here. But what other work is outstanding on that front, maybe through kind of FEED and FID stage?
We still have to go through that final decision making on the funding, and obviously you can't do that until you know where your funding sources come from. So the next stage for us is obviously to take it to the FEED. We tend to do a lot of work in the bankable to get it right, but you at the very end you've always got those optionalities when you've done it to go back and say, well, I got 4 quotes for everything. Is there an alternative way of looking at it? The capital for the fleet, for example, we've put it through as capital. Could you finance the whole lot? There are a number of companies out there that will finance your mining fleet on a lease basis, and that may be an option to look for us as well. There are different ways of going on EPC, which we didn't look at, particularly in somewhere like Zambia, where you've got a lot of Chinese construction companies that will look at that as an option as well. So those are things to go through and consider in the next stage as we go through. The other aspects we've got all the mining permits, but we do have to go and reapply for the ESIA. So we've already done all the baseline work. The ESIA document is currently being crafted alongside the full FS document. By the end of Q1, that should be filed with ZEMA, the environmental authority in Zambia. And at the same time, we are doing the relocation action plan. So we engaged last year, once we had pinned down what the project looked like and which communities and people may be affected by it, we started that engagement program, and that's well advanced. While we get the approval, while we do the review of the ESIA, we'll be engaging with the community on those that need to be relocated. They're subsistence farmers. They're very keen, though. I mean, we've got a very high approval rating from the local community. They're very keen to see this project work. We do everything on an IFC guidelines basis as well, but we also have a lot of experience, or the team that's handling it for us in Zambia, of doing this before, and so we work off that track record and that continual engagement directly with the community, but also with government officials as well.
Okay, so just a few things there. On the ESIA, you've obviously got to be done to IFC standards and all that kind of good stuff. But can you give me a sense of what expected timelines? Because I think a lot of the uranium audience listening to this will be used to the kind of conversations in North America at the basket type timelines. In terms of getting an environmental approval timeline in Africa timelines.
Yeah, I mean, our guys who are the consultants for this say, based on their experience with this, 6 months.
Okay, so right, different ball game. Different ball game.
I mean, right. It is a very structured process, and you engage all the way along, but you don't have to have this back. We're dealing directly with the community, who are the ones most affected by it, and we're dealing with everybody else already. So it is a 6-month process.
Okay, so in terms of those 2 communities, you're saying it's a reasonably good reception so far, but we talk about relocation here, so that can be a big upheaval. So they'll be affected, but they could be the beneficiaries in terms of jobs, etc. So to them, what are the kind of concerns that you need to address? And again, what's the process timeline with that?
You have to provide them a like-for-like or better replacement. We're not taking them miles away either. People are literally moving close to the project, but far enough away that the project won't influence on them, but close enough that they can take the jobs that would be created by the mine. We have to replace, therefore, the housing. We have to ensure there's livelihood restoration goes through. So if they've got farmland, replace that farmland, so it's farmland. Tenure of land, the land is currently owned by the tribal chiefs. We'll look at that issue for the people as well on tenure of land. So those are the things you would expect. I'm being moved. Am I going to be in the equal or better position? And of course, there's the jobs. And as we've discussed before, we already started the education program 2 years ago to ensure that the local people had the appropriate level of English education, because a lot of them didn't speak English. And the next stage for us will be technical training, to start giving people basic skills that we can then use on the mine to train up further.
Okay, right. So as you say, there's a process to go through to work out where the money's coming from, and therefore what does that look like and what it costs you, and so on. Part of that equation is clearly going to be the usual stuff. How do you do that? You're going to need term contracts in place or offtake agreements in place to start those conversations, presumably. So again, how do you imagine the process looking going forward?
Well, as we kind of alluded to before, it's a big Rubik's Cube. You don't just thing and then the next thing. You run the whole process in one go, because different people run at different time frames as well. I mean, some are quicker than others. The first stage, in my view, is you always start with the debt, because it's a long timeline to get them to where you want them to be at the end. But with the lenders that once they've done, and they do way more due diligence than anybody else, you have to go through all of their processes, technical due diligence, environmental. So when the equity guys actually are asked to come in with the core equity that comes ultimately before the debt, they know the debt guys have already done the review, and that's already part of that process. The offtake side of it just runs parallel, and you'll gradually tie in those offtake contracts as and when they become available. And there's no big rush for us to be in the offtake market at the moment. What we have done is it's gone out to it. The feasibility study, press release, the videos that I've done have gone out to all of the utilities we talk to. I'm going down to Indaba next week. I know you're going to be down there as well. And almost all of my meetings are with lenders. Potential lenders. That's our target, the Southern African lending market predominantly. And to intro a project that we'd had already discussions with a year ago. And so that starts the process. And then you go through the normal, okay, who's interested? Who wants to put an LOI in? Those that want LOIs. All right, now you go into the data room in force and go to the next stage, and we'll see where we get to over this year.
So your message to the market is you're confident that the money's there once you kind of go through this process. It's not the case of it's going to risk off and no one's knocking on the door.
No, I mean, look, literally my majority of my meetings at Indaba are lenders who said, come and talk to us, present this. And they're even more than I had last year. So no, real interest. It's okay, let's go and talk. And there is interest in mining in general. I mean, 2 years ago, the South African banks weren't doing mining. They're all doing mining, and they're very interested in uranium now as well. So yeah, it's keep moving forward on this project. The industry needs projects. I mean, as you said, it's in deficit. The industry needs projects. And I was asked by somebody the other day, said, are you focused on one area or the other? I'm like, no. One of our benefits is we will ship out of Walvis Bay. So we can go east and or west on material. And when you look at the market, if you look at somewhere like the European utilities, in 2022, 60% of their feed came from Niger, Kazakhstan, and Russia. They don't get any feed from any of those anymore. So that's got to be replaced. And we've seen that attitude change. They're more interested as well, and they're comfortable with Zambia. The North Americans are exactly the same. I mean, the US market producers have got to go. But you put a company out like Constellation consumes 15 million pounds of uranium a year. That is pretty well everything the US guys can produce if they all get up and get going. It then relies heavily on Canada, but it wants diversification. And then you've got China, who relies heavily on Kazakhstan, but can't buy from Australia and can't buy from Canada, and therefore comes to Africa as well. So I think we're in a great position from a market point of view and supply to the market.
Okay, well, let's maybe move to kind of a market, a quasi-market conversation with you, because obviously I'm looking to that initial CapEx. I'm also looking at the OpEx side of things and trying to work out what the kind of fixed and variable costs will be. You've done this study on $90. Obviously, we're sitting around the 70s at the moment, right? It came off last year. You've got to believe, the people you're talking to probably don't want to believe, but your shareholders want to believe that it's going to be a lot higher than that. So, talk us through how what those conversations look like if uranium price, spot price doesn't move, and talk to me about the impact of what term contract pricing looks like in that scenario. And if it does move, what does that do for you?
Yeah, I mean, I think that's the first point. This is all about the term contracts, not about the spot market. Term contract actually went up this month end. Actually went up $1. The spot went down. And what we've always said, the spot market's all discretionary, and it's so small. And the real issue is those big term contracts and where they're going. And I've said in other interviews, the utilities spend a lot of time in the last 2 years fixing their accounts and understanding where they were going. And at the moment, same as we had 2 or 3 years ago, their biggest concern is EUP, which is going through record highs, and UF6, which is also still climbing and high. And that is their biggest concern at the moment, are those prices. So it's eyes off U308 at the moment. It's not, we think it's going to go down, but we have an even bigger problem, which is those two prices, and we've got to fix. They will come back to the U308 market, and they'll come back with a vengeance, because if you look at all of them and you look at the forward allowance for 27 and 2028, the curve just goes up. They need material, and it needs to be delivered. And back to your point, if the uranium price doesn't go anywhere, yeah, I mean, the two link to a degree, but if you don't see a uranium price, you won't get projects built. And you will have the same problem you had in the past. It gets deferred if it stays down there, and all we'll end up with is a bigger kicker at the other end. Because at the end of the day, this market is still in deficit. And the forecasts are higher and higher nuclear power generation, therefore higher and higher demand for uranium. Against that, you've got declining production, not increasing production, as older mines burn off their resources. So low prices are great supply for low prices. It will force it higher. So I'm very comfortable that over this year, you will see the utilities come back and start looking at their U308 demands once they've sorted out their current EUP, UF6. And we saw this at the beginning of the decade. Those two led U308 up.
Yeah, look, and I think that you talk about low prices. I'm referring to spot, presumably, and for most retail, they feel that is the thing that they should be looking at. But I think the driver for the nuclear industry is baseload energy at a low price, and in terms of this, return on capital invested, like was it the energy return on capital invested equation that the industry looks at, because it's got to pay for that, it's got to build it. So I'm a big fan of nuclear. Everyone knows that. I'm heavily invested in it. Everyone knows it. But I also don't want to drink the Kool-Aid in that sense, because utility companies have got options in terms of the multiple types of energy that they can supply, in terms of gas in the US, and renewables is doing a decent job, etc. Does coal still have a place here? Does other fossil fuels have a place? I don't know. So it'd be interesting to sort of see if the market reacts and how quickly the market reacts in 2025. What I also know is, for those that do need it, there's not a lot of option. Kazakhstan is exporting east. We've seen, obviously, still Russian sanctions hard and fast in place, and not a lot of optionality in the West, it seems. So interesting year ahead. But you are one of the few advanced development stories out there talking about, trying to sort out, move towards FID. That's good news for you.
Oh yeah, I mean, I think it's the right thing to do. I think the market, needs the feed, and we have to be moving towards that. I mean, it's a long process that we still have to go through, but there's no reason that I can see at the moment not to keep going forward. I'm very confident in where I look at the market that uranium prices will go higher. And we have to plan to be there to deliver into that market.
Yeah, it's interesting. It's an interesting equation. It's kind of like, uranium could move to $500, but there still won't be enough to sate the needs. That's the exciting thing for you guys, the guys who can get this thing over the line, get into production. That's the opportunity in front of you. Uranium could move to 500, and that utilities are still going to have to look for alternative finance, energy solutions. So it's super exciting times. Right, let's talk about the economic realities of where you are and therefore what it means. Right, you are having conversations around how you finance this thing and the cost of financing this thing. Is there any part of you, in terms of deep yellow style, saying, "Sod this, I'm going to sit back and wait till I've got better margins"? I think, people at UEC could be accused of the same thing. They're just waiting to say, this does not work for us. I know it's economic at today's level, even at today's levels for you, but can you afford to take a pause, or is it first mover advantage means a lot?
I think at this stage, we still have a lot in front of us. We still have to go through the debt financing. We have to get that lined up. And at this stage, it wouldn't be sensible to pause at all. And I think you have to take that view and go forward. We know it works at $80, so why not just keep going forward anyway? I mean, Deep Yellow has paused, but they only paused until March. I mean, it's not as though they paused for the whole year. So it's not the longest pause of all time. It's a sort of slight intake of breath. So I don't see the reason at this stage why we need to. We keep going forward. I'm back to my view. I think if you look at where the price guys are looking and advising the utilities that $90 and $100 uranium is doable by the end of the year. In which case, I think this is a great opportunity rather to be there when that market is around. And as we discussed before, when we talk to utilities, they require uranium in 2027. And more importantly, they all have capacity in 2028. So if we're not trying to get our project ready for them for 2028, then we're going to have the price will be there anyway for us, because the price they have to fill those books. So the time is right to be there. We have the capacity. We have a project that's ready, and we need to keep going forward towards that. There's no reason not to.
Okay, I guess between now and decisions being made, you were trying to work out what the lay of the land looks like. I'm not going to have a conversation with it. Do you need working capital pre build or even pre ramp up, because you're going through a process of working out what that needs to look like on the basis of the kind of conversation feedback you're getting probably from Indaba. I suspect. So you come back to me another time and talk about that. Can we just talk a little bit more about the positioning yourself for success in a market like this, if you don't mind? Because we're saying, I think you're one of few, advanced developers. We've stated that, but it is a very interesting marketplace when it comes to understanding the kind of geopolitics of what's happening. It kind of feels like African projects seem to be heading east. China has got its tentacles everywhere in most African states looking at this stuff. Is that a consideration for you as a sort of North American listed company?
I think at the end of the day, you in Africa have to sell to whoever's willing to pay you the best price for the material that you've got. And if someone's willing to pay you the price, then you sell it. And we are right there coming out of Warfus bag. So why would we not look to sell to where the market wants it? And the Eastern market is growing its nuclear faster than anybody else's.
Okay. I can see. I'm not going to get much from you on that front. I'm not going to bother. I'm not going to bother. No, it's just like, so I think a lot of uranium companies being African project, uranium companies have been sort of tippy-toeing around that one, because it's a question of, it is very much east versus west and access to capital and where it comes from. And I think latterly in the last half, I think Banham and Deep Yellow said, well, actually, China is a consideration if that kind of keeps this competitive tension going.
But this is the difference for African companies, though, Matthew. The majority of lenders that we talk to are South African, and therefore it is Western money, but it's coming out of a country that is African and focused on Africa. And South Africa's political positioning is very different to Europe's or the US's political positioning. And therefore, that is a different place where your money is coming from. And therefore it gives you that optionality, which is the right thing. I mean, as a company, you're in Africa to have that ability to go where you want to on either side.
Okay. I do have lots more questions, but I think let's wrap it up there. Not least of all because your insight action is a little bit sticky today. And we shall maybe get you back on after Indaba, so see what you heard. Maybe come on the energy show and talk about it in a bit more macro. So safe travels, sir. Congratulations on this report, this economic study. Not bad, and certainly stands out from the crowd. So thanks for your time.
Thank you.